That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Prairie Operating Company EVP Market Strategy, Lou Bassanes, as well as Yahoo Finance's Jared Blikre, joining us here to break down all the moves. Jared, let's start with you on that close.
Thank you, Josh. We saw some positive action into the end of the day. We'll start off with the Dow, which still ended in negative territory, a whopping 25 points to the downside. But let's look at the chart here. You can see regained most of that lost territory in the final minutes. And then you take a look at the Nasdaq, which was already in the green. It added to its gains as of 1 hour ago, and it ended up the day about 1% higher. And the S&P 500 climbing into the end with a half point or 0.5% increase. And I'll close with the Russell 2000 here. Russell 2000 small caps were not able to pull it out in the end, still down about 0.3%. I went over the bond moves in the last hour, but I just want to show the 30-year one more time. It was approaching 5%, but it's down another 8 basis points to 4.89%. And with that, let's move on to the sector action, where we see communication services by far and away the leader, up almost 1.7%, followed by tech up 0.6%, and then trailing the S&P 500 itself, we got consumer discretionary. So if you're paying attention there, we got all three mega cap sectors in the green, and then to the downside, crude oil really taking a toll on the energy sector. That was down over 2%, and then some of the other cyclical sectors also down about 0.2% for materials, and then 0.5% for industrials. And you take a look at the Nasdaq 100, pretty solid performance by the mega caps overall. You can see Microsoft just barely finished in the green there. Nvidia almost regained some of the losses that it had earlier in the day. Alphabet, though, having its best day in a number of weeks, up 9%. Apple also outperforming, up almost 4%. That was powering the tech trade and also the communication services trade. And not a lot of action to the downside there. And if we take a look inside the semiconductor, we can see a lot more red than green. So semiconductor is really not pulling it out today, but software, a lot more positivity. You got Salesforce up over 1%, so was IBM, so was Intuit, so was SAP, and Workday, Zoom, and the list goes on. And if we take a look at the Dow, we're also seeing kind of a mixed board here, and you can take away the mega caps, and if we sort by performance, I'll just show you how the final split, a little bit more red than green, and not surprisingly to the downside, the biggest underperformer was Chevron, part of that energy trade I was talking about. Back to you, Josh.
Thank you. Appreciate it, Jared. Lou, your thoughts on the trading action today?
I really want to see some follow through tomorrow, because this favorable ruling for Alphabet really removes a major regulatory risk from the entire big tech sector for the Mag 7. Want to see if that can follow through. Alphabet has more room to run. It's the cheapest of the Mag 7 stocks at about 20 times earnings. So I think this rally continues for them, but does it carry through and have a halo effect on the rest of the sector? And then energy is a key focus point for me. Oil down another almost 3% today. I would argue, and this is a contrarian stance, Goldman Sachs is out saying oil is going south of 60. I'm telling you the sweet spot for most producers in the U.S. is between 65 and 75. That's what they need longer term to profitably produce oil. We're going to head back there gravitationally in the next 6 to 9 months, I believe. That's not priced into this market. That would be slightly inflationary. But I agree with the previous guest that AI is a huge deflationary balance to any reinflation.
Well, it was interesting. We were talking together to Mark Newton, the great technician, chartist. He sounded broadly constructive, not just when he was talking about the charts, Lou, but I thought it was interesting with Mark, if I'm paraphrasing, he kind of said, listen, earnings solid, economy's hanging in there, Fed cuts on the way.
Yeah, earnings are the most solid thing that people are underestimating. If you look, the estimates for this quarter going in right at the start of the quarter was for about 4.9% earnings growth for the S&P 500. It came in at 11.9%. This is the second quarter in a row that actual results bested estimates by more than 2x. So I think this is a very good harbinger of the underlying strength of the economy and corporate profitability, and that translates into higher stock prices down the line.
All right, let's talk more earnings while we're on it, because turning out Salesforce, that company's second quarter results just hitting the wire. You can see they were down about 1% initially. Let's get the results. Q2 adjusted EPS, I see $2.91. I don't see a clean compare there. For Q2 revenue, $10.24 billion. That's up 9.8% year over year. It looks like Q2 operating margins, 34.3%. Street was expecting 33.8%. Now let's turn, though, to what does Mark Benioff's company see in the forecast? The guidance, Q3 adjusted EPS, they're calling for $2.84 to $2.86. The estimate was $2.84. The Q3 revenue, there they're calling for between 10.24 and 10.29 billion. The street was at 10.29 billion, so maybe that explains a bit of the initial disappointment there. I'm just looking for the full year as well. I see full year revenue, they're looking for 41.1 billion to 41.3 billion. They had seen 41 to 41.3 billion. Keep in mind this stock, Lou, it's already had kind of a rough move. I mean, heading into this print, we were down about 25% year to date.
Yeah, the narrative has been that AI is going to eat software, right? And then we got a counter narrative to that last week when MongoDB reported results and rallied 20+% after hours. I think you're right. I think looking quickly, first blush at these numbers, it's the guidance not really being great moving forward.
The Q3 revenue at the midpoint,
you've got to demonstrate, like Alphabet had to do 2 quarters ago, and show that, hey, in an age of AI, we're still going to be relevant. And you're seeing across the tech sector, though, cuts in terms of employee layoffs because productivity is going up. How does that translate into the software sector, and is it really a threat, AI, to their underlying business?
Yeah, I do have estimates now. For Q2 adjusted EPS, they report 291. Street was at 278. Q2 revenue 10.24 billion. The Street was at 10.14 billion. But again, it's that guidance I think investors are focused on. If I told you, Lou, I want to assemble an AI portfolio, you'd probably put NVIDIA in there, right? Maybe you put AMD. Would you put Mark Benioff's company in there? Would you put Salesforce in there?
I think you don't bet against them. I think you have to have it's adapt to AI or die, a type of approach, and these are proven innovators that have navigated dynamic market conditions before. I would put Apple in there, right? The narrative against Apple is that they don't have a solution for AI. Guess what? I think that Tim Cook figures it out in time. Could it come with a partnership with Alphabet? Maybe, but I wouldn't bet against these bigger names that have a lot of resources to deploy to their advantage to win in this game.
All right, we're here for a closer look now at the latest quarterly results from Salesforce. We got Jefferies senior analyst Brent Till. Brent, always good to see you. So Salesforce reports the stock, and at least initially here, Brent, we're down about nearly 4% in the after hours, but let's hear your take on the print, Brent. What'd you make of it?
I mean, it was in line. It wasn't better than expected, and you need better than expected when the AI narrative right now is that it's going to eat all applications. So, don't hate the player, hate the game. The game right now is you got to get north of 10% constant currency backlog, and they hit 10%. Half their customers in Agentforce are paying. It's not having a material driver for growth, and they're guiding, to high single-digit growth. And so, if you look at every large cap software name in our coverage universe, Salesforce is the slowest growing of them all.
Brett, Salesforce does have AI products, and I'm sure if Mark Benioff was here with us on set, he'd tell us all about them. Is the problem here that they're just not compelling right now, as compelling as investors hope they would be for customers?
I mean, they're in their infancy. We've talked about AI and applications versus AI and infrastructure. I mean, all the attention's in infrastructure. Microsoft, Oracle, NVIDIA, go through the list, right? Where are all the numbers inflecting? In infrastructure, what happened here? No inflection. So, look, everyone has an AI story, but the reality is the actual impact has been not material to the revenue yet. It will be for Salesforce as we go into next year and the year after, but we're talking about years. We're not talking quarters until it's material. And that's the challenge. Again, when you see inflections in Azure inside Microsoft, you see Oracle's backlog at 100% growth. We're talking 10% constant currency backlog. Just to put this in perspective, Snowflake's growing 30, right? We can go through all the lists, like all the numbers relative to its peers, they are underperforming. So
yeah, Brett,
it's not bad. It's not bad. No one's going to say these are bad numbers. We're just playing a relative game where everyone else in a relative basis, Josh, are way better. And that's why you're seeing Microsoft stock up, Oracle stock up, all these other stocks are down. The reason why Salesforce stock is down 20+% is that there is no inflection. There's a worry that Benioff's going to go out and do a lot of M&A. And there's been no inflection in the numbers. I mean, again, we're talking the slowest growing large cap name. Oracle's going to grow faster than Salesforce. So
So
we're not negative Nellies. We're just,
yeah.
the point is like when you put it relative, they're the slowest moving vessel in software right now.
And Brent, correct me if I'm wrong though, you do have a buy on Salesforce. Explain that
Valuation
to us.
valuation's at a 10-year low, and we think that Agent Force will build. We think that they can sustain, again, pretty good numbers. And again, there's no breakout play here, and so I'm trying to articulate the good and the bad and just play the ball where it lies. So the point of this is that I think when you have the most hated name in my coverage, you have a valuation at almost a 10-year low, and we think they're doing the right things, and we think that Agent Force will have a bigger impact over the next year. Again, this is more of a valuation buy than an inflection buy. There's way more companies that are inflecting that we like more, and we've highlighted those. Microsoft, Snowflake, Intuit, you go through the list. There are relatively higher rankings in terms of where we would put money to work. But again, I think you look at this, and if you have a longer term lens, this stock was actually above where it is today, where it is right now when they launched Agent Force. Agent Force propelled the stock, from 250 to 350, and it's given it all back now. And so I think a lot of the expectations are out of the stock.
Brent, what do you mean? Talking about acquisitions, what did you make of that $8 billion acquisition in Informatica? I mean, in your opinion, smart move financially and strategically?
Yeah, they were going to do it last year. They saved $2 billion. So they got it cheaper than they did last year. So this isn't like it's new on their radar. They've been trying to buy this for a while. So they saved $2 billion. Second, we know in the age of AI, you need clean data. You need the right data, and you have to put the data in the right spot. Informatica helps them. They already have MuleSoft. You've got Informatica. This should help them, with this AI journey. And we think, again, I think the thing that's worrying investors is, they went through a period where they expanded margins, didn't do M&A, and the stock did really well, and they showed organic innovation with the Agent Force. Now the worry is with the new CFO in place that came in recently, bending up back to doing deals, like are we kind of back to the old Salesforce way where we've got to get growth via acquisitions? And he's done 3 deals in the last month, tiny, smaller deals, not the size of Informatica, but he's doing more deals. So I think there's all kinds of signals right now where it's a relative bet, Josh. Everyone relatively in software is betting on other names. The hedge funds are short Salesforce, they're short every application name. Salesforce's underperformance is not unique. Workday's down. You go through the list. Any horizontal software company, Adobe down, they're all down because investors right now, it's deja vu. 2024, what worked? NVIDIA, Microsoft, all the infrastructure names. What's working in 25? All the infrastructure names, because AI has not taken off yet. We're getting ready for AI. And so is the Salesforce portfolio in a better spot for when it comes to the application layer? Yes. Has it taken off? No.
So AI not taken off yet. I meant to ask you, Brent, about this MIT study, which I'm sure you saw, and I thought, I bet Brent has thoughts about this.
Never heard of it.
Yeah, I'm sure. 95% of organizations, Brent, studied zero return on their AI investment. I'm sure, Brent, some people saw that and they thought, okay, our absolute worst fears about all this AI investment, there it is. What did you think of that?
So I think it's thoughtful work, and I think it's real work, and that it matches what we're hearing. Some of the best data companies in the world, Databricks, Snowflake, all the best AI companies we talk to in the enterprise, not consumer AI, not Perplexity or ChatGPT or OpenAI, right? Enterprise, this is matching what we're seeing. Less than 5% of the software industry's revenue is from AI. We know all the AI products do great backflips during the demos, but when you put it in live production, it can barely tie its own shoelace. Wait, so we've seen this even in our own deployment and a lot of other enterprises' deployment of AI. It's slow. It takes time. You got to get data security right. You got to get data flow right. You got to have the right integration. You have to have the right training. You got to pull people away from their jobs to do the training. We're internally at our firm going through all the same challenges every other firm. So a 5% success rate, 95% fail rate, I think may seem high to most, but any new technology shift It doesn't happen overnight. It takes time. But the survey of the CIOs is that that rate, they're committed to improving. Everyone's trying every AI tool. Right now we're in an AI bake-off. Literally everyone's it's like going to, your fourth graders cupcake festival. Like you try all the cupcakes, then you bet on which one works. And right now, like everyone's trying everything, and we have AI fatigue. So now what's happening is everyone's like, hey, time out. I got to take a break, digest what I got, and figure out what's going to work. So we are in that digestion phase. It's going to take time. So I've said this, I'm very bullish in AI long term, but I might be the most bearish analyst on enterprise AI because right now, everything that Wall Street wants to happen isn't happening. And we've said this, the technology just needs time. It's like any tech shift. Like you didn't buy everything off of Amazon the day one when it came out. You didn't push everything to the cloud day one when the cloud came out, right? It takes years. It was like 60, it was like 6 or 7 years to get broadband penetration to a very small percentage of the households. I mean, you can go like in any tech shift. This just takes time. And so I think we're following many of the same parallels of the last shifts we've seen. And yeah, look, the market was not expecting a 5% hit rate, 95% failure. But I would say that I think what CIOs realize is they're committed. It's a long road. And again, looking up your favorite restaurant or trying to compare hotels on Perplexity is different than trying to do AI inside your enterprise. It's going to take time, but CIOs are committed. Dollars are being allocated. The technology is getting better and better day by day. And we have to give this time. But it's not, again, not a win for applications yet. It's a win for infrastructure because all these apps are going to require infrastructure. So the safer bet in AI is Microsoft, Oracle, many of the infrastructure vendors that are powering this versus the application vendors themselves.
Brent, always great to see you. Always great to have you on the show. And Lou, thank you as well, my friend, for joining for the full hour. Appreciate it.
Great to be here.
Coming up, it's a first for Figma. I'm going to tell you what to expect for the first report after its IPO. Stick with us. More market domination overtime coming up. Figma plunging here after reporting second quarter earnings. Its first report following its IPO in late July. Here with more, we got Rishi Jaluria, RBC Capital Markets Managing Director Software. Rishi, great to see you. So Figma reports the stock here, Rishi, we are down a quick 13% in the after hours. What do you make of the print?
Yeah, Josh, always a pleasure to be with you. Really appreciate you having me on. Look, I think this is a function of two things. Number one, the stock is obviously richly valued. It had, a very successful IPO, and even with the pullback off the day one highs, it's still one of the most expensive stocks in software. And so they had what I would say was a good quarter, right? They guided above the street. They're guiding to pretty nice growth in Q3, but it wasn't a blowout quarter that I think you need to support the stock at these levels. Now, let's see how the call goes. There's an opportunity for them to, kind of take control of the narrative, talk about, any level of conservatism that's maybe in the guide. But that's what I think is going on with the stock. It's just the stock was richly valued and high expectations. And
most, Rishi, on the street, I know, do have a hold on this one. I know you do too. You rate this one sector perform. And that is, Rishi, that is mostly a valuation call on your part?
That's exactly right. Look, I think that there's a lot to like about Figma. Even if you get into the whole existential debates around AI and their role in that world, I think they have a great product strategy. I love the innovation here. Margins and growth are great, but the valuation has been my stopping point. And, in spite of everything, I think we still have to be disciplined on valuation.
To put it simply, it's a design software company. How big, Rishi, is the market they're ultimately targeting here, and how fast is it growing?
Yeah, look, I think it's a massive market opportunity, especially when you start to layer in AI. But even before we start thinking about AI, the fact is all our experiences increasingly have to become digital, right? We demand these consumer grade experiences from every single application we use. Like, why shouldn't, banking with RBC be as easy as using Uber or watching a movie on Netflix? And so that increased digitization of the economy, I think this is the gold standard in that. And then there's all these levers that you see them expanding their platform into, whether it's collaboration and whiteboarding with FigJam, developer mode that allows you to kind of get under the hood. And now a lot of these AI native capabilities that they built out, including Figma Make, which really gets them more into that vibe vibe coding space. So if I really think about where they are today and where things are going, this is a big market that is still growing rapidly, and they do have a big right to win over the long term.
So it's a big market. It's growing strongly, Rishi. Others are playing in it too. I'm curious, who would you consider, their clear rivals, and what makes them different? What are they bringing to the table that's different?
Yeah, look, the biggest rival in the kind of design software space is still Adobe, even though they've kind of end of life their own Adobe XD solution. I think the bigger debate that most people are having right now is, well, what about all these vibe coding solutions out there? What about Lovable and Vercel and Replit and all these amazing tools that are growing super rapidly? And I think the question we have to ask is there a real disintermediation risk for Figma? And to me, that depends on the success of Figma Make, right, which is their own kind of solution to that. And I'll be looking out for a lot of commentary on the call around early adoption there. But that's really who I think about as the chief rivals, right? It's Adobe, and then it's a lot of these AI native software companies.
And that's where it's interesting because you mentioned AI. You'll hear different takes on that and what it means for Figma. You'll hear folks say, listen, opportunity for Figma. To your point, I do hear other analysts say, it's a risk, just given the Gen AI tools coming from startups and the hyperscalers. That is a potential competitive problem for Figma.
Yeah, look, I think the debate will take a long time to be settled here, right? But I think the product innovation is going to be super critical, that they can have success with these AI tools. And really, I think if Figma Make is successful, they have claims to be an end-to-end platform where you do the kind of traditional natural language, vibe coding, so to speak, but then you layer on traditional design elements. Your developers have the ability to go under the hood rather than just trying to get AI tools on AI tools, and you create vibes on vibes to create an end product that maybe has a little bit too many issues, too much latency there. And look, given how important digital experiences are, you cannot afford latency, you cannot afford points of failure, because that results in lost revenue. So I do think that end-to-end story is a unique one for Figma that really no one else has today.
Rishi, always great to see and to have you on the show. Thank you.
Thank you.
Time now for to watch Thursday, September 4th. Going to start off on the earnings front. More reports rolling in on Thursday, including Broadcom, Lululemon, and DocuSign. Broadcom announcing results for the third quarter after markets close. Analysts expecting the semiconductor company to beat Wall Street's forecast for Q3, give strong guidance for Q4, driven by continuing demand from the AI trade. Going to take a look at the Federal Reserve as well. We're going to be getting some more commentary from a couple of Fed presidents on Thursday, with John Williams and Austin Goolsbee. The U.S. Senate Banking Committee also holding a hearing to consider Stephen Moran, President Trump's nominee to the Federal Reserve Board. Moran will take over Fed Governor Adriana Kugler's seat, whose term ends in January. And finally, fresh data on the labor market coming in on Thursday with ADP employment. Economists forecasting companies to add 68,000 private payrolls in August. They'll be down from 104,000 in July, signaling a cooling in hiring. That's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's asking for a trend. Stay tuned.